Analysis: Twitter has legal part in deal dispute with Musk. Wilmington, Dell. Twitter Inc. NYSE, TWTR, has a robust legal case in opposition to Elon Musk on foot away from his $44 billion deal to accumulate the U.S. social media organization, but ought to choose a renegotiation or settlement instead of a long court docket combat, in line with felony experts. Delaware courts, in which the dispute among the two aspects is about to be litigated, have set an excessive bar for acquirers being allowed to desert their offers. But target organizations often pick the understanding of a renegotiated deal at a decreased price or monetary repayment rather than a messy court battle that may last for plenty months, 3 company law professors interviewed by way of mentioned. The argument for settling at something decrease is that litigation is costly, mentioned Adam Badawi, a law professor at UC Berkeley. And this factor is so messy that it won't be well worth it. Twitter and Musk spokespeople did not right away reply to requests for comment. Musk's important declare against Twitter is that the San Francisco-based organization breached their deal as it will not share with him enough information to again up its claim that junk mail or faux debts constitute much less than 5% of its active users. Twitter has stood by means of this estimate, however, additionally said it's viable the variety of those money owed is higher. Musk also said in a letter to Twitter on Friday that the employer's misrepresentation of the range of junk mail money owed is probably a material destructive effect that might allow him to stroll away below the phrases of the deal settlement. But legal specialists mentioned Delaware courts view May's as dramatic, sudden activities that cause long-term harm to an enterprise's performance. Deal contracts along with the one among Musk and Twitter are so prescriptive that a decide has ruled that an May has validly been prompted solely once within the records of such litigation in the case of German healthcare group Fresenius Kabi AG ending its deal for U.S. frequent drugmakers Acorn OTC, AKRXQ Inc. in 2018. In that case, a court docket dominated that Acorn's assurances to Fresenius that it became in compliance with its regulatory obligations have been faulty. It also determined that Acorn had withheld records approximately its deteriorating overall performance that emerged in whistleblower allegations. Legal specialists had been dismissive of the concept that wrong junk mail account numbers might quantity to an May for Twitter at the same level because the troubles that plagued Acorn. If it is going to court docket, Musk has the burden to prove more likely than not, that the spam account numbers not only had been fake, but they had been so fake that it's going to have tremendous impact on Twitter's earnings going forward, mentioned Ann Lipton, accomplice dean for school studies at Tulane Law School. Musk additionally claimed that Twitter breached their settlement by firing 2 key high-ranking employees, its revenue product lead and standard supervisor of consumer, without his consent as required by their agreement. That's probably the only declare that has any purchase, stated Brian Quinn, a professor at Boston College Law School. However, he did now not believe the firings have been serious enough to have an effect on Twitter's employer. In 2020, the Delaware courtroom allowed Murray Asset Capital County of South Korea to walk far from a $5.8 billion luxurious lodge deal because the pandemic brought on the vendor, Anbong Insurance Group of China, to regulate its regular path hotel operations. Settling rather than litigating to the end most of the times the courts discover in favor of the target corporations and order acquirers to complete their deals a prison remedy referred to as unique performance. In 2001, for example, Tyson Foods NYSE, TSN, the most important U.S. hen processor, decided it not desired to shop for the most important meatpacker, IBP Inc. A decide ordered that the deal be completed. Many companies, choose to settle with their acquirers to end uncertainty approximately their future, which can weigh on their personnel, customers and suppliers. This took place more frequently whilst the COVID-19 pandemic broke out in 2020 and added an international financial surprise. In one example, French store LVMH threatened to stroll away from a deal with Tiffany & Company NYSE, TIFF. The U.S. Ring store agreed to decrease the purchase charge by way of $425 million to $15.8 billion. Simon Property Group Inc. NYSE, SPG, the biggest U.S. mall operator, controlled to reduce its buy fee of a controlling stake in rival Taubman Centers NYSE, TCO, Inc. by way of 18% to $2.65 billion. Other companies permit the acquirers walk away in exchange for financial repayment.